all three of us are native New Yorkers. So I continue to be very interested in New York politics, right? And one of the things that you're touching upon, Tim, really has to do with redistribution, if you really think about it. And progressive tax policy is something that I think has to be spoken about. It has to be discussed in society. If you're accumulating and developing and increasing assets, and as an individual, as you mentioned, that's all well and good. Then there is a part of society that wants to take those assets away from you and redistribute them to others. So that presents one question. And as native New Yorkers, you see what they're going through right now with regards to the mayoral election. And it'll be really interesting because I think that with the way technology is right now, there's no reason to be in New York anymore, literally none whatsoever. So you've seen firms like Citadel, for instance, move out of Chicago. This is one of the largest market making and hedge funds companies in the country, moving down to Florida. Listen, if I'm making $500,000 a year and I move down to Florida, I just got a 13% increase in my salary because there's no state income tax. It's the greatest thing in the world.
Hey everybody, welcome back to Markets and Madness. As we like to say, the place where we discuss the madness that occurs when economics, politics, and personalities all move in different directions. Tim and I here today, and we have a special guest, Gary Tsarsis. Gary and I go back probably 40 years or so. You spent many years in the financial markets, and now you're a professor. So why don't you introduce yourself, and then we'll take it from there.
Thank you, guys. Appreciate it. Thanks for having me on. Let's see now. Let's give you the 2 minute version of my background. I grew up in New York. I currently live in Arizona. I'm a professor at Arizona State University in their business school, which is the W.P. Carey School of Business. I teach corporate finance as well as financial markets and institutions, and I work still full time. Um, I started in the markets working in between my sophomore and junior year of high school. So I got a job in the mailroom at Drexel Burnham, which was the first company that I worked for, and very exciting job. I used to walk around the building just delivering mail. So I used to just chit chat with people along the way. I had no idea what they were doing, but it looked like a lot of fun, and they were all wearing Armani. So I figured at that point, they were probably doing something right. So I would stop and I would ask, okay, what do you do? And I trade corporate bonds. And okay, what's a bond? So you just start having these types of conversations. And I come back 10 hours later, and my boss was like, "Dude, where you been all day?" I was like, "Well, I stopped and I asked everybody what they do, and it was kind of interesting, and I still have no idea." But anyway, I grew up in Staten Island primarily, and I desperately wanted to get off of Staten Island. So I started college at USC in Los Angeles. So I moved to LA, and it was while I was there that I got this interest in the market, and I really kind of just started to focus on it a little bit. And as I changed over from a pre-law major to a business major, I wanted to go to a better business school. So after 2 years at SC, I transferred back to NYU. And I continued to work for Drexel during all that time as well, so which was a lot of fun. The day I graduated in June of 1983, I became a corporate bond trader working for Mike Milken's group in New York. So it was a lot of fun. It was worth all the hard work. And I loved every second of it. I still kind of miss it a little bit. I did pivot, however, in the mid 80s. I was doing the bond thing, and then I became an over the counter trader. I wanted something that was interesting, something that was new, something that I could learn something every day. And I had left as a sabbatical to get my master's degree. And when I came back, they said, "Okay, Gary, you can go wherever you want in the company." So I says, "Okay, I want to pick some place that's interesting." So I chose the international markets. It was kind of new at that point. It had been around for a long time, but it wasn't really the where it is right now. And they said, "Okay, do whatever you want to do." And I loved it. I did it for
Is that
23
at
years.
Drexel or?
I started at Drexel. That's correct. And I did
Yeah.
that for about 5 years at Drexel. And then I left to go to Barclays. And I've been at subsequent other places as well. The last 7 years of my career was at Jefferies, which kind of oddly enough kind of comes full circle because
Mhm.
Jefferies basically is Drexel West. So it's run by a guy named Richard Handler. Handler was one of Milken's lieutenants. He's still the CEO to this day. So that was a lot of fun. During the fiscal crisis, like everybody else, everybody's impacted at some capacity. And my boss called me up. Jefferies was based in LA at the time, and said to me, "Gary, listen, we got to start cutting some people in your department." And I said, listen, man, I'm kind of done. If I could save a few jobs, pay me out, I'll be pretty happy about it. I was 47 at the time. And they paid me 2 years, 2 years of medical. I said, okay, it sounds pretty good. And I saved a couple of jobs, so I thought that was okay. So since then, I didn't know what I wanted to do with my life, the rest of my life. I'm not very good at retiring, as I'll tell you a little bit later. But I decided that okay, I like this teaching thing. I had been doing it as an adjunct at NYU for a long time. I said, let me see if I could give it a try as a full-time player. And I did. I got a full-time job working for a university in North Carolina, which was done by a friend of mine who's a hedge fund partner down in Florida. She's on the board of trustees at this university. I got the job, and the rest is kind of history. I've been doing that now for about 14 years.
That's great. Yeah, ASU now, right?
ASU, yeah. This is my beginning of my fourth year at ASU. Yep.
That's great. Now
But
I
Gary,
got it. Go
sorry,
ahead, Tim.
Gary, Fred and I grew up in the foreign exchange markets. And back then, not so much today, I guess, but back then, no matter what bank you worked for, you were a
Hmm.
market maker.
Yep. Hmm.
And that's one of the things I think that's interesting about financial backgrounds. That you get to understand markets when you have to make them. And, and on this podcast, we talked a few times about what it would be like if the world were loaded with market makers instead of merchants.
Yeah.
What if when you had to buy a computer, you called up a guy and you said, okay, this is the computer I'm interested in. The guy said, all right, I'll buy him at this price and
Right.
I'll sell him to you at this price. You know, that spread kept them honest. You know, you
That's
wouldn't have to
true. Very
shop
true.
anymore. You'd go to one
Very
place
true.
and you'd know you're getting a fair price.
Very
And
true.
that's the beautiful thing about market making and understanding what it was like to make a living when you're forced to sell at a fair price and buy at a fair price. You know, it's a
That's
discipline that's imposed
It's a
on you.
good, it's a very good point. You left out the one part that you generally know where most of the bodies are, however. So,
Well, it depends. You know, if you worked
yeah,
for a big bank back in those days, yeah, you
yeah,
did. But if you
yeah.
worked for a small bank like I did, I mean, you
Mm.
were in a void. Everything was
No,
price
that's true.
discovery.
That is true.
You know, I didn't have
But
a branch to
I
look
remember
at through
going
the
down to
clothes.
speaking of market making, I remember going down to the floor of the New York Stock Exchange a couple of times when I first started. And it was always interesting to me, the chaos of it, first of all, but second of all, that the specialist basically knew everything. Like they knew everything because you had to go to the specialist at that point to figure out what the supply, the demand, what what it looked like, basically what
Yeah,
that book looked like, because you really didn't have any depth at that point. You had to go have a conversation with them. And these guys they had the gold, they had the diamonds, they knew where everybody was. And there was, God, I can only imagine how much money they were making at
See,
that
the
point.
foreign exchange market was a whole different animal. I mean, news would come out and there would be a void, no prices at all. And there were, it, even when there were screens, but even before screens, somebody would call you up and you'd have to make a market. And the last price you saw, you know it's got to be lower, but you really have no idea where.
Right, right,
So you,
right.
so you close your eyes and you stick in a bid and you stick in an offer and you make it wide enough. Uh, and then all of a sudden you hit and you say, oh, you
That's
know, I'm
right.
long now.
I
You know,
always
it
tell the
must, it
story
must be
about.
lower.
I always tell the story about. I guess it was when numbers came out, and I forget what it was, whether it was employment, trade figures, whatever. Scam and I are making prices in dollar mark at the time before the euro. And he's making quarter three quarters to the desk on this side, and I'm making a quarter three quarters on the desk on this side. And he looks over to me and said, "I just sold 10 at 75." I said, "Good, because I just bought 8 at 25." The clients had no idea either. And then the market
it's
eventually narrowed, and it was 32.5.
sure,
4
sure.
hours later.
Well, that goes to really speaking about like the inefficiencies of the market to a certain extent. So you can make an argument that that the markets have come a long way in the last 40 years, that they've gotten really probably way too efficient in terms of exploiting any sort of real arbitrage type opportunity. I mean, they do exist, but they're so small in terms of time
Yeah.
that you've got to really have the top capabilities in terms of technology and coding and things like that in order for you to really pounce on any sort of discrepancy. But I remember back in the day, speaking of sort of the foreign markets to a certain extent, but using an example like BP, British Petroleum, there was an overlap between BP trading in New York and also trading in London
Right.
simultaneously. So the variable, of course, would be the currency. So you couldn't really be tracking both of them simultaneously. So what the traders generally would do, they would buy a basket of sterling or dollars, whatever the case was, at a certain price, and then they would say, "Okay, listen, I've stabilized one of the variables. Now I got to figure out how I use that variable to my advantage." And then you would look for the difference in the price between BP and sterling and BP and dollars. And a lot of people made a living doing stuff like that for a
Yeah,
really,
I
really
did.
long time.
I
Yeah.
worked for a small stock company, and what I would do was create foreign exchange positions based on equities. You
Right.
know,
Okay.
buy an
Okay.
equity in one place, sell an equity in another, and could care less about what the equities did, generating a foreign exchange position. I would trade the
Right.
foreign exchange position.
Gotcha. Gotcha.
It's the other way around it. Yeah. Yeah. And you know, you talk about knowing the inside book. Tim always used to tell a story about my grandfather, who I didn't know. He died before I was born. It would be a piece of cake or something, and two of his grandchildren wanted it. He'd say,
Sausage, sausage.
sausage, you cut and you pick." We knew that was the fair price, right in the middle. So, you know, there's a million questions I want to ask you, but the first one is being a professor these days, what are the kids looking at? What's their focus? You hear a lot of this story about the the left-leaning academics and
Hmm.
how what these kids are being indoctrinated. Are you seeing that, or are they becoming more well-rounded? Are they seeing through it? Is really
Well, I'm gonna answer the question honestly, but I'm gonna be as PC as I possibly can here because I like ASU.
I get it.
And so I'll give you an example. Business students, generally speaking, tend to be capitalist. Okay, so
Mhm.
they're going to business school. They're going there to learn about business and ultimately to make money. It's a little different in the liberal arts schools and the humanities schools. So that's where you're going to see more of the left-leaning sort of student and the indoctrination that you're talking about, basically coming from the professors. Business professors are a little bit different. I'm going to give you an example of how I approach these political landmines. Okay, so I'll say, listen, I'll start all of my classes the same way. I don't care what you think about Trump. The only conversation that we're having about Trump in this particular classroom is how it's impacting the policies of business, how it's impacting the economy. I don't care what he thinks about abortion, about social issues. They don't come into play in my classes. What is the tariff issue doing to the business community and the financial markets? That's where we have to keep things fairly narrow, and they sort of get it. They understand where I'm going. They want to see uh, politics. Obviously, is important to all markets, but I need desperately right from the get go to narrow that focus where they don't get out of that lane. They're only talking about politics from a business perspective. That being said, um, a lot of universities are grappling with this issue because obviously Trump is taking away a lot of their research funding, and this is major league money. I mean, you've seen what's happening with Harvard and Columbia and places like that. They're all petrified. Every one of these universities is petrified. So they really need to be very careful about what they do here. I think a lot of universities are breaking down or sort of getting rid of their DEI type programs and a lot of their departments like that, and that's going to be an interesting thing how that continues to move forward. In the end, Fred, basically, it always comes down to money, and it always did, and it always will. And I think at some point, most of the universities will come full circle.
Now, Tim, I know what you always talk about is politics and economics. I'll let you expand on that to
Yeah,
Gary.
yeah. We're in a time where most people confuse politics with economics. People start talking to me about their political views, and I stop them.
Hmm.
I say, "You're not
Right?
talking politics here. We're talking about resource distribution, which is a
Yeah,
key
it's true.
component of an economic conversation." Now, you want to talk about tax policy? Let's talk about it as how it impacts supply and demand. I'm just starting an article. I don't know how long the article is going to be, but it may end up being a book. And the idea is that we human beings are governed by a law. I mean, we walk outside and we deal with gravity every day. Well, supply and demand is like gravity.
Hmm.
You can't really, so supply and demand is a force that exerts upon us. And we are
Right.
creatures that live on the demand side of the world. We go out, we walk out of our door, and we're looking to satisfy demand in one
Sure.
sense or another.
Sure.
If it's a job, it's in order to acquire assets,
Hmm.
and we're looking to acquire. Very little we do. I can't think of anything we do really, frankly, that doesn't put us in a category of seeking demand.
Hmm. Okay.
We
Yeah.
organize we
I see
organize
that.
society in a way uh,
Hmm.
that either says, all right, we're central government and we'll distribute supply as we see fit, what
Hmm.
our society calls fair, or we'll let you guys all contribute to supply in your own way
Hmm.
and you all generate supply. So
Right.
I think if we were, aliens, space aliens, and we look down at this society, we say supply and demand governs them. But but as individual humans, we haven't addressed that. We very few people really understand and grasp that. We ought to teach that in kindergarten. Just teach that in
Yeah.
first aid, in
So,
kindergarten.
so all three of us are native New Yorkers. So I continue to be very interested in New York politics, right? And one of the things that you're touching upon, Tim, really has to do with redistribution, if you really think about it. And progressive tax policy is something that I think has to be spoken about. It has to be discussed in society. If you're accumulating and developing and increasing assets, and as an individual, as you mentioned, that's all well and good. Then there is a part of society that wants to take those assets away from you and redistribute them to others. So that presents one question. And as native New Yorkers, you see what they're going through right now with regards to the mayoral election. And it'll be really interesting because I think that with the way technology is right now, there's no reason to be in New York anymore, literally none whatsoever. So you've seen firms like Citadel, for instance, move out of Chicago. This is one of the largest market making and hedge funds companies in the country, moving down to Florida. Listen, if I'm making $500,000 a year and I move down to Florida, I just got a 13% increase in my salary because there's no state income tax. It's the greatest thing in the world. I think you're going to see that trend continue, particularly out of places like Chicago and New York, especially if the socialist candidate wins the mayoral election in November.
Yeah, I couldn't agree more. We're certainly seeing it. There was this talk during the pandemic that U-Hauls. It was tough to get U-Hauls in New
Right.
York because they were all in Florida. They were all down south. But yeah, that's true. What do you think about Trump in terms of economics for the first 7 months that we've seen so far?
I actually know Scott Bessent, and I used to deal. One of my biggest clients when I worked on Wall Street was Soros, and he was the CEO of Soros for a period of time. Really, excuse me, really smart guy, straight shooter. I always liked him a lot. I think he's definitely the adult in the room. There's no question about that. Lutnick, interestingly enough, he came from Cantor. He was the
Mhm.
CEO and one of the founders of Cantor.
Bernie
Not
Cantor's
as
nephew.
impressed with what's that?
He was Bernie Cantor's nephew.
That's right. Yeah. So he's and his brother was killed during 9/11. So he's lost a lot of people. You have to give him a lot of credit for rebuilding the company the way he did. Um, I'm not sure. I'm on the fence about Lutnick in general. I think Besson is the better choice at the moment. But getting back to your question, Fred, I worry a little bit about the up and down tariff policy. I think it's a little too inconsistent for my liking. That's the one area that I'm not happy about. If you're going to go through with it, go through with it. All right, and then we'll all live with the consequences. But you just can't keep using it as a bargaining chip. And I know there's a lot of negotiations going on right now. A lot of these countries, we need some of these products that they have. There's no question about that. We need iPhones. We're not building an iPhone in the U.S. because it's going to cost $6,000. We need it to be built at Foxconn in China. That's the only way it's going to stay at $1,500. So at some point, I think that it's either you're negotiating in good faith, you just can't keep changing the policy up and down. I'm sorry, I disagree with that, and that's the one area that I'm a little disappointed in. Most of the other areas I'm okay with.
We've done a couple of episodes. We've talked a lot about this in the past, and one of them we labeled "Ready, Shoot, Aim." Which was Trump's policy. Tim would say that he was a firing mortars in the army, and it was shoot. All right, we got to aim. We got to adjust, and that's
I'm,
Trump's
I'm thinking
policy.
about that over the weekend, and a good analogy to that is a guy saying to a lady, "Okay, take me to Paris for an all expense weekend, fantasy weekend together. And she says, "What are you crazy?" And he says, "All right, how about a trip to the men's room for 20 minutes?" You know, this is Trump. I mean, this is Trump. He starts out with this outlandish position, and people tend to label that as backpedaling, a backtrack, and all he's really doing is testing the waters in one direction or another. And
Right.
he uses tariffs as the plug figure. He'll
Hmm.
start out with some number in a neutral universe and then say, all right, South Korea, we're supplying you military. So that's got to be worth what? So how many percentage points is that in tariffs? So that should slope my way. And I really think that's his game. So we misinterpret it if we think that he's changing the deal or moving the play. He's just using tariffs as a plug figure to resolve everything else.
Hmm. Yeah, that's a good point. I do agree with that. I think that what worries me is the impetuous nature that he has. He's a little too at the moment. I'm not sure if he sees something on Fox, he'll talk about it 2 hours later. And I get it. He's very tight with the folks that are there. I understand that that's a lot of his base is there. I get that part, but
If his
there seems
cabinet
like there's not enough thought process that goes into some of the things that he's talking about. And listen, you guys and I are old enough to know what Trump has gone through, okay, when he was younger, when he took over the company from his father, the bankruptcies in AC, the coming out of the bankruptcies, the buying of the plaza, all these types of things. And he might be Teflon, man. It might be impossible to get him, because he just does come out of these things. And the fact that he won a second term, I think, just shocked so many people in general, to be honest with you.
Yeah. And there's all this talk now, especially over the weekend. Tulsi Gabbard putting some things out about the previous, I guess the previous 12 years or so, or maybe
Sure.
more,
Sure.
from
that,
Democratic leadership, what was
Right.
done.
Right.
that's I think the weirdest thing.
Yeah.
You
Yeah.
know,
Good point.
you've heard him make these mercurial statements, and you pass it off as saying, "Look, we caught him in a bad day. Nobody could really believe this," and then
Right.
it turns out to be true.
Yeah.
3 months later,
Yeah.
6 months later, and we faded this guy so many times, and said, "No, it's impossible," and it turns out that it really is true.
The
So he's developed a
excuse me.
degree of credibility that
Right.
I didn't really think possible.
Right. So at the story of the day, of course, is the Epstein. They're trying desperately to have some level of a connection. Listen, I think that there's something being hidden here somewhere. I don't know exactly what it is. Was it Bill Clinton 25 times on the plane going down to the islands? I have no idea. The this is the hill that I think the left's going to try to die on. They're going to say, okay, listen, there's something in this Epstein thing. Well, what they're forgetting, of course, is that Biden had that information for 4 years and never released it. So clearly, there's people in this thing that have to be protected, either both on the left or the right. I'm not really sure, but they're always looking for something. They're always looking to knock the guy off the pedestal, and I think that's one of the sad states of politics in general. Let alone the fighting that goes on both sides of it. It used to be that my first election was when Ronald Reagan was elected in 1980. That was the first time I voted for president. My dad was a big Reagan, guy, and I was really excited to vote. I never forget this as long as I live. So the next day in school, right? I had just transferred to NYU. I go to school, and this political science professor that I had, said I was a class of about 75 or 80. Which one of you have the audacity to admit that you voted for Ronald Reagan? So I was like, yeah, why not? I raised my hand. Me and one other kid. We just the two of us at 80. And I got a B plus in the class. I was positive that he held that against me. And he was yelling and screaming, "Oh my God, he's a fascist, he's this." I was like, come on, this is politics has gotten to the level where you can't even have a conversation about it anymore before people just start losing their minds. And I think that we still live in that environment. I'm not sure it goes away anytime soon.
Yeah. Yeah, it is. It's true, and we made this point a number of times. Politics has become religion. In
Yeah, it's
Reagan's
true.
day,
That's a great analogy. That's a perfect
in,
analogy.
in
Yep.
Reagan's day, he would have drinks. He would argue with Tip O'Neill on the floor, and they'd both come to Dallas. And I
That's right.
remember, and I've said this a couple of times too. Evan Bayh, if you remember
Yeah, I
him,
remember him from Indiana, right?
senator. Yep, and
Yep.
he took over his father's seat, and I guess it was about 10 years ago. He put a resignation in and I sent it to the New York Times, and I read his resignation letter. He said, when my dad was senator, we would always have the other side over for holiday meals and we'd talk and
Wow.
they would
Mm.
disagree. He said, but now I can't get anything done because
Yeah.
if I'm
Yeah.
I'm either opposing my party and I'm an outcast, or I can't go along with what I believe. He says, and so there's really no point for me to go forward.
It's very sad. There's nobody really that's kind of bringing the whole thing together. And like I said, I live in Arizona, and McCain was sort of like a hero out here. He's one of these guys that I have enormous respect for the guy. When I read his book, I almost started crying. The guy was in POW camp for 5.5 years. Some of the things that the guy went through, I don't think any human would be able to survive. But he was one of these guys that was sort of walked in the middle. He was a Republican capitalist. He owned the largest beverage distribution company in the West. His wife's family owned it, so they had lots of money. But he was trying his best always to sort of walk in the middle, and you had to appreciate that. You had to understand where he was coming from, and there's not too many people left like that.
No, no. And Tim and I argue about this all the time. I say it was Gingrich's fault with the Continental America, and he says it was Clinton's fault for pushing Gingrich to that point. So it goes
Yeah.
back to then, right?
I still see Gingrich on TV once in a while. He's still kicking and screaming like he was.
Yeah.
He was a pretty powerful leader back in the day.
Yeah, he was a factor and remains a factor, I think, in
Hmm.
terms of thought leader. But you may remember a book called Future Shock. It
I
was
don't remember that. No, I'm
that
sorry.
that book. No book really impressed me up to that point in my life until I read this book, and I read it in the '70s. And it was a guy by the name of Alvin Toffler, who Gingrich was very close to. In fact,
Okay.
Gingrich wrote the foreword for one of his books. And Toffler made a point about future shock. Think about 1970, what it was like. We were all there. And he started to project forward and he said, we're at a time now where all these things we've constructed, all these laws that we've constructed are being, or have atrophied and they're being
Hmm.
replaced with technology.
Sure.
And he raised the point about cloning. People were starting to talk about cloning. We hadn't cloned the sheep at that point. And he said, what if we start to clone human beings? Does that human being have the same rights as another human being, uh, his clone? And we don't really have a legal process to deal with that. And it strikes me that in terms of constitutional law, we're at that point today. I mean, there's a lot of points being raised now constitutionally that we could call a crisis, but I really prefer to think as a place where an argument needs to be had to settle the issue.
That's good.
And with respect to markets, when you have a social fabric uh, which really has upheld the integrity and the appeal of
Hmm.
the United States as an investment place, um, when you start to pick at tenets inside the Constitution to say, hey, is this really valid? Uh, we were there, and a lot of the findings that we see every day on the news makes you wonder, really, whether or not this is going to be thrown into a Supreme Court that may or may not be biased and seems to vote along party lines as well. And to me, I think if you really had to hover way above at 50,000 feet and look down and say, what's really threatening this?
Hmm.
I think it's our legal framework and our
Right.
constitution.
Right. So the just to take one of the pieces that you're talking about is that a couple of years ago at the university I was before ASU, they had asked me to teach derivatives, and I've never taught derivatives before. I never really even traded them back in the day. If we had to hedge something, I would just ask the clerk to find something, for us to hedge. So I had to really basically teach myself all about derivatives. And one of the areas that you teach yourself about derivatives is the impact that derivatives had during the fiscal crisis. So what the where I'm going with the story is this is that so many people are still using derivatives. You hope that most of it is traded on the futures exchange, where at least you see it. At least there's some level of regulation, but there's still a lot of it that's done, particularly on the forward market, which is done privately. So this is where I think a lot of regulators get really concerned. Where I'm going with this is that, here we are 15, 18 years later off the fiscal crisis, and you say to yourself, okay, have we gotten better? Well, maybe we've gotten better, but I look at like an 80-year-old senator from Iowa, investigating, a hedge fund manager that trades derivatives. If you're trying to regulate something, you basically have to know what you're trying to regulate. You really have to have some level of understanding of what you're talking about, or where at least have a cognizant conversation about it. So it does worry me that with all the speed, with all of the AI, with all of the coding, with all of the derivatives, things of this nature, those are the areas that I'm still concerned about in the financial markets, especially the speed. So we use as an example in one of my classes. We'll say, okay, listen, if I trade a derivative in New York and the client is in London, right? Theoretically, I have two different regulators that are involved, right? Let's say now a third party gets involved and buys it from the other party, and that party is now in the Emirates. Okay, now I got three regulators involved. Are they regulating these products the same way? Is the first question, and the answer, of course, is no. So that's one of the areas that I think that has to be improved. There's a global regulation framework, I think, which been trying to do since 2008, has really never come to fruition.
Well, in the retail foreign exchange industry over the last 10 years, there was a term that was built up called regulatory arbitrage. You
Mm.
find the venue where you want to be. And, and a lot of these contracts do have specific language as to who the regulator is. And you have to sign off on those
Right,
before you enter those contracts.
right.
So, is it going to be New York? Is it going to be London? Is it going to be the Emirates?
That's like shopping for a judge on a legal case.
Exactly.
But let me raise an issue. I've been thinking, I had a conversation the other day about some people not wanting to, the housing industry is being impacted by people with low interest mortgages because
Hmm.
they don't want to leave a 3% mortgage
Right, right,
and
sure.
absorb a 6% so they don't
Hmm.
move. And I
Right,
said, this is not a problem because any bank with any kind of savvy can construct a derivative to say, all right, I'll tell you what, we can get this mortgage off the books and I'll give you a new one at
right,
4%. And now I got a 3% mortgage off the books. Yeah. I moved the 3% mortgage to a 4% mortgage
right,
with derivatives contract. It's very simple. We just move the cash flows so that there's a 1% differential that's accommodated at each payment period. And that's very simply a derivative contract between a bank and a consumer. And if I was sitting in a bank and I wanted to improve our positions for all these 3% mortgages we got in the book, I'd be selling these goddamn things. I mean, and this is something that any mortgage holder can understand. Hey, my payments are going from $1,200 to 1350, but they're not going to 1850, and I can move to Texas or Florida like I want to.
right, right.
So the regulators get around that, I think, in the U.S. through the Basel Accords. Basically, it all boils down to leverage components and leverage factors, whether or not a bank is over leveraged or deleveraging,
Hmm.
and what these contracts do in terms of the value at risk. The
Right,
VAR models really drive
sure.
that whole process.
That's a good point. It is a good point. I think that most of them, obviously, the banks are not holding the derivatives anymore. I'm sorry, the mortgages anymore, because they're just passing them right back to Fannie or Freddie, or selling them right away.
Yeah, right.
They're trying to keep the balance sheets as clean as they can. Basically, just keep reissuing. The problem is that these mortgage groups right now, they're dying because nobody's taking mortgages out at 7. So what we're noticing, especially in Arizona, is that the builders are starting to buy down the mortgages fairly aggressively. So just to put that into perspective, if I buy down from 7 to 4.5, let's say on $500,000, that's a $70,000 get, even if it's for a couple of years, for the buyer. That's a huge impact on the profitability for the builder. There's no question about it. And I think that trend is becoming a little bit more nationalized at the moment. But the real estate market to me looks very heavy. It looks like it's still due for a pretty big fall. There's a lot of supply starting to come on the market. I think, especially out here, I'm looking more regionally at the moment. But you're seeing prices actually start to decline. And I think that that's a necessary evil. It needs to reset at some point. We had this absurdity during the beginning of the pandemic, where prices were going up 15-20% a year. It was very similar to right before the fiscal crisis. That's unsustainable. The historical trend is what, 4, 5, 6% on a year-to-year basis, and it needs to reset to that level. And I think
Just the
that's where it's
cost
going.
of insuring or maintaining the asset It's
God,
gone up commensurately with the value of the
absolutely,
asset.
absolutely. Yeah, the
Looked up the other
just
day. Yeah.
yeah, the climate change issue and the cost of materials and so on and so forth. And I agree with you. I think those are two inflationary areas that most people are not paying attention to, which would of course be car insurance and homeowners insurance.
Yeah. Car insurance.
I remember I had a guy I worked with. He worked for me actually, and I knew his salary because he was working for me. And he went out and he was buying a house. And somebody asked him, you think you can afford this house? And so, yeah, the payment said this. And I said, you know what's going to bother you? What's going to hit you in the ass? A ladder. And he said, what are you talking about? I said, a ladder. Do you have a ladder? He said, no. I said, well, you're going to want a ladder. You're going to need a ladder. And let me tell you what your toolbox looks like. You got a pair of pliers and you got a couple of screwdrivers, and maybe you might have a hammer. That's pretty much it. And you're going to be going to Ace Hardware because there was no Home Depot at the time. And you're
Sure,
going to be
sure.
going to Ace Hardware every week to buy something else. And then you got empty rooms. You got any furniture? You
That's
got a
right.
couch to put in that room? No, you're going to need a couch for that.
That's
So
right.
it's all of the incidental,
Absolutely. Absolutely.
extemporaneous issues that make it
Absolutely.
awesome.
But that being said, Tim, all three of us are from, are children of the markets, but the vast majority, the overwhelming majority of wealth in this country is still gained from real estate. There's no question about it.
Yeah,
I think I read like it was like 95 or 96% of all millionaires in this country made their money from real estate. And I don't foresee that trend ever really stopping anytime in the near future. Although that being said, I talk a lot obviously to students on a regular basis. And it's amazing to me how many students are actually in the market, purely speculative, because they have Robinhood accounts and their friend told them to buy this and they're buying Bitcoin and they're doing this and doing that, or they're buying the Magnificent Seven. So, of course, all of them are playing the NVIDIA market because NVIDIA is never going to go down again because that's the way they're all
Apple
thinking.
too.
Right, Apple as well. But NVIDIA is the first $4 trillion company.
Yeah.
So, they're just, yeah, we'll just keep going, keep going, keep going. And I keep reminding them that Bitcoin was started by drug dealers and money launderers. Okay, let's keep the origination of it, in perspective. I am a believer in fintech. I'm not necessarily a believer in Bitcoin per se, and I think that blockchain will have a sort of a position in life until the Fed and until major banks get behind these types of things. It is purely speculative at this point. I can't go into the grocery store with Bitcoin, to buy food. It has no practical purpose in life at the moment.
I was talking to somebody on Friday who I respect. Tim and I know well, and he's got a strong background in the markets. And we were talking about some of these crypto coins, not necessarily Bitcoin, but I think it was Ethereum
Hmm.
and Solana. And he said that there's going to come a point in the very near future that Chase is going to have their own coin, Walmart's going to have their own coin, and that's all going to be backed by Solana and Ethereum, and you're not even going to
Right,
know that you have a position in
right,
those essentially
right, right.
derivatives, those coins, because
Sure.
you have this Walmart account or this Chase account. So I thought that was very interesting about where
Well,
the next step is going
how
to
would you
be.
like to be a Fed chairman trying to figure out what money supply really is? And you have
It's
these
true.
points. I mean,
It's
I've
true.
always said that Amazon gift cards should be an essential ingredient towards a money supply calculation. We
That's
had this argument
interesting.
in the 80s. What the hell is money? Money is a demand deposit, but it's also a money market account, and effectively, it's now stock. If
Yeah, to a certain
you
extent.
got
I mean, I'm
Bitcoin,
intrigued. I'm intrigued by the whole thing. I mean, I really do. I pay a lot of attention to it. I'm very interested in crypto in general. I'm trying my best to understand, as a neutral person. I'm trying my best not to have an opinion one way or the other. But I don't see the relevance in society. That's the part that I'm grappling with. Like I can't go and buy a car with it. I know Tesla tried to do this a couple years ago. It lasted about 10 minutes because the price of Bitcoin was changing so rapidly that the price of the car would be changing while the conversation was happening, that you were trying to buy the car. And I think it was El Salvador moved to a Bitcoin related currency. It was a kind of a funny move. It lasted about 2 days, and everything went back to the dollar.
Well,
So,
I'll say this: about 15 years ago, there was a banking crisis in Cyprus and Greece. If you remember.
Okay. All right.
And in the retail foreign exchange market, Cyprus is a big place. And I was talking to one of the younger guys, a client of mine out of London, and Bitcoin was just in its infancy, really. And I said, if this really is valid, if you don't trust the banks, you should be heavily investing in Bitcoin. And this guy did.
Hmm. And
And
he
he
bought Cyprus after
exactly. He
that.
became he's actually had him on a podcast a couple of months ago. He's an expert on the subject. He went to the Middle East, the UAE, and he was Binance's general manager in
Wow, that's interesting.
Dubai.
Wow.
Yeah, he left foreign exchange probably like 8 years ago and moved into the crypto space. And now he
That's
speaks a lot.
awesome.
He's like all these topics, but he's done
Beautiful.
very well.
Good
And I
for
had
him. Good for him.
another guy he worked prime broker at Chase. Then he got one of the big HFT firms out of Chicago, who got very involved in a DRW, I think it was, got very involved in crypto. And about 3 years ago, 4 years ago, I reached out to him. I said, somebody I know is looking to set up a Bitcoin exchange. What do you know, Rob? He says, all I could tell you about Bitcoin is never sell it. And I said, all right, you're not giving me much. He says, let me explain. He says, when Robinhood opened up, we were a big part of Robinhood. He says, I
Hmm.
opened up an account, I put a couple of grand in it, played around, I bought some stuff. He says, and I forgot about it. I just let it be. He says, and then Robinhood got to be popular again, and one of the young kids on the desk said, you got an account, right? You were talking about. He said, yeah. He says, do you mind if I log in? I just want to see. He said, yeah, sure. So he gives him the kid credentials. Kid logs in, comes back to him and says, have you checked that account recently? He said, no, I haven't checked it in a couple of years. He said, well, you should. It's up 350 grand. So he says, don't look at it. Don't ever sell it. Just put it.
He was right.
Yeah.
He was right.
So,
You
But
know,
I think that the argument I would go with is this, getting back to the conversation that I have with younger people about investing, is that they're not investors anymore. They're not willing to do the work. They're not willing to do the research. They're not willing to take the long view. Everything is bang. I want to return as soon as possible. I want to return tomorrow. I don't want to do the research. It's what my friend told me to invest in. That's gambling. That's not investing. And
it's
and I
trading.
and
It's
it
trading.
is,
It's not
but
investing.
I feel that I might be literally pissing against the wind in this one. I'm not sure, but my job is to teach these kids that you have to take the long view. Listen, if I'm buying a trend, let's just say one of the trends that I buy is diabetes. So I've been doing this for the last 10 years. Diabetes is a growth industry. Okay. The technology that's attached to it, 90 million people in the US are either diabetic or pre-diabetic, 2+ billion overseas. This is a growth industry. It's not going away. Obesity is here to stay as long as we can, foresee the future. That being said, I buy anything that's attached to diabetes. I buy the technology part of it on how to actually see whether or not your blood sugar is good. I'm also trying my best to come up with the cures, the Ozempics of the world and things of that nature. So I'm looking at that as a 20-year story. I think that I'm trying my best to envision where this all goes, and I think that it has a lot of potential in terms of as an investment. But I'm an exception, it seems, because more and more of these conversations that I'm having with people is I'm buying Nvidia today because I'm going to sell it next week up $10. That's not investing, and it bothers me. I don't know why it bothers me, but it bothers me, and
I,
I
I
don't know.
have 2 points I'd like to make, and they're
Yeah.
unrelated. One, going back to stablecoin, it's occurred to me that if you're a non-dollar investor sitting someplace in Europe or the Emirates or somewhere else, and you buy in stablecoin, you're taking a foreign exchange position. So this is very much like the arbitrage conversation we had with stocks. Stablecoin arbitrage ends up being an intermediary into a foreign exchange position. So I
Mm.
wanted to make that point a little earlier.
Okay.
The other point, getting to the difference between trading and investing, is actually closer to my heart because that's one of the questions that I ask everybody who comes to me about the market. Are you a trader or are you an investor?
Right.
So they require two different skill sets. Basically, trading is analyzing mob psychology.
Hmm.
What kind of shiny object is going to catch the
Right.
attention of the market today?
Right. Right.
Because when we traded for a living, we picked up the phone and the first thing we said when we got somebody answering the phone on the other end is, what do you think? You were trying to figure out what focus is. What are we looking at today? And if you want to focus on the debt and you take a position based on that, and nobody else is looking at the debt, nobody cares about the debt, it might be valid in 3 or 4 years. Well,
Okay.
then you're an investor, not a trader. And I think that's the distinction to make between the kids, you know. Are you trading
But
a
how
market?
many times, Tim, have we seen in the last 20 or 30 years everybody all of a sudden became a day trader? Well, that lasted a couple of months till they all ran out of money. We saw this all happen during the beginning of the pandemic. You know, these people were getting money from everywhere. They were getting stimulus checks, they're getting unemployment checks, they're sitting in the basement with $3,000 a week. They didn't know what to do with themselves. So, okay, I'm going to become a trader. So I use as a kind of a goofy example of one of my classes, you know, when we talk about investing. I talk about Reddit. I was like, okay, like every Yahoo in the universe is on Reddit, you know, chatting up their own positions. The objective, of course, is to get as many people to believe what that person is talking about and to get them to move their own position. So in order for them to make money. So I says, you know, it's kind of like it's like the Wild West to a certain extent. But remember, all these people have motives that are somewhat different than yours. You know, keep that always in the back
Online
of your
pump
mind.
and dump, right?
That's it. That's it,
Well,
man.
you
That's
remember
it.
the book, The Peter Principle?
Yes.
The idea was, you know, you're a good salesman, so they make you a sales manager. And while you're a good salesman, you're a piss poor manager. So that you've elevated into your position of inadequacy.
Right,
Well,
right.
the day traders you're talking about didn't
Yep.
learn the real lesson. And the real
Sure.
lesson is leverage.
Yep.
Not, I mean, you could be very good at trying to figure out what the market's going to look at next or what the market's looking at today, but you might not know enough to set the appropriate size of your position and the leverage you can absorb. So before you learn how to trade, you should learn a little something about leverage and risk management. And I think
Tim, I
that's
got to be honest
the
with you,
issue.
man. Retail investors should stay as far away from leverage as they possibly can. That's a major no-no. I mean, I worked at Solomon Brothers when Merriweather was running long-term capital management, and Solomon was one of the investors in LTCM. And their leverage at the time was like 50 to 1. It was some absurd amount that they were leveraging every dollar of assets that they had, or every dollar of investments that they had around the world. And that was the first bailout. I mean, if you really think about it, it was the first Fed bailout that really came about.
Well, yeah.
But I worry that, speaking of leverage, you can have a big conversation about leverage, but just look at leverage from a day-to-day perspective. You know, the housing market to me seems like it's toppy. It looks like it's due for a little bit of a fall. Well, the people that bought houses in the last 3 or 4 years, okay, and I understand mortgage rates were a little on the lower side. I get that part. But all of a sudden, some of these houses are going to start to turn upside down. And do they have the financial resources to maintain the houses, first of all, or did they over leverage from the beginning because they got all drunk on 3 and 3.5% interest rates on the mortgage side? And that worries me too. I think it's a terrible thing. Mortgage could be your, I'm sorry, leverage could be your friend if you're using it in the right way. I don't think the vast majority of retail people do. I think that they generally are over leveraged. And you could say the same conversation about cars, credit cards, student debt, the whole thing.
Well, if we're talking about traders, a bunch of them are writing naked options.
Gosh.
And the regulators are keeping that leverage in place.
Yeah,
You know,
yeah.
but they don't understand the leverage. I would say, and I'm going out on a limb here because I have nothing to back this up, but I would say the large group of day traders and day trader types really don't appreciate the kind of leverage that they routinely assume
Mm,
until it
mhm.
blows up in their face.
That's
In
true.
the retail foreign exchange market, a lot has been done on this. And you talked about 50 to 1 leverage. There are retail foreign exchange brokers that'll give you 500 to 1.
That's crazy.
And people will leverage up, and as soon as the spread widens, they're liquidated. Doesn't even have to
Unbelievable.
move. You can go from a 1 pip spread to a 3 pip spread, and they're liquidated because they're so leveraged up. So what the regulators did probably about 10 years ago, maybe more, they said you can't have more than 40 to 1. So
40 to
40
1.
to
Okay.
1,
All
40 to
right.
1 was okay. So what happened? All these brokers opened up offshore because
So they get around it.
wants
Sure.
the client
Sure.
wants 200 to 1, the client wants
Sure.
300 to 1. He
Right.
wants the juice. He wants the
Right.
needle
Right.
in
Right.
his arm. Yeah.
Right. Well, speaking of starting overseas or having your companies based overseas, and probably about half the hedge funds in the U.S. have some sort of They're domiciled in the States, the other domiciled overseas. Many years ago, when I first started working at Barclays, one of our largest accounts at Barclays was Barclays Private Bank. And we had no idea the size of what Barclays Private Bank was. This is for all these people that were trying to hide assets. They were all over the place. So the people in London sent me and one of my colleagues down to the Caymans, which of course is a horrible trip. You know, make it on a Thursday and you got to come back on the Sunday night. It's just awful. But we get to the Caymans, and there's, you know, the largest building is 3 stories. And that's where Barclays Private Bank is located. I was like, okay, this is, I don't get it. I don't see how all these companies can be based in the Caymans. So as we walk into the building, it's only 3 floors. Barclays Private Bank is on the 3rd floor. You see all these gold plaques along the wall, okay, which are basically, it'll be Fred Scaler Incorporated, okay, and Tim Scaler Incorporated underneath it. So you're domiciled in the Caymans, and basically it's just a post office drop. That's basically what it was. There were thousands of them along the wall, just these little name monikers, and just up and down all the staircases. That's all you saw. And it goes back to this regulatory issue. I worry still from the regulatory aspects because of the globalization of the markets, because of the speed of the markets. At some point, global regulation has really got to be a global product. It has to be. And it's the only way to make the markets a little bit more efficient in the end. Now, you and I, we've been traders for a long time. We look for inefficiencies. We like inefficiencies. We want to see more inefficiencies. But the average retail investor, I think, is not like us. They want to see a little bit more transparency.
Yeah. Well, look, Gary, I know you have a hard stop, right? You got to be out.
I do. Yeah, I do. I got to get out of here by 8:30, but I do appreciate it. And this is great, guys. I love this sort of thing. I really appreciate your
I'd
time.
love to have you back on. I think it was, you know, I think we could go for it. We've gone for 50 minutes. I certainly think we
Yeah,
could
it was very quick. It's
a
true.
lot of stuff we didn't get talk. I wanted to talk to you about the Fed and all the things that are associated with Powell, but we'll save that for another time.
Tim, where do you live, by the way?
I'm in beautiful Florida. I'm in Lakewood,
Beautiful.
Florida.
Awesome.
Yeah,
Fantastic.
I got out of
Beautiful.
scenic New Jersey a few years ago
Yes,
and
yes, yes.
escaped.
Yeah.
Yeah. You're in
New
Arizona?
Jersey.
Yeah, I live in Arizona. We just moved, as a matter of fact. We lived in Scottsdale for about, I had the house in Scottsdale for about 11 years. And we have 4 of our 6 kids now live out here. So 2 of them still live on the East Coast. One lives in New York, and the other one lives in Charleston in South Carolina. But the other 4 are all out here. So we wanted to move a little bit closer. So we just actually had a house built in the western part of Maricopa County. So it's about 30 miles from where I used to live. It's nice, a little too rural for my liking, but it's okay. It's in the mountains. It's kind of pretty. But that being said, it's still 195 degrees on a regular basis.
Yeah.
Chris and I are taking off to go to Lake Tahoe on Wednesday for about 5 days. So we're looking forward to that.
Nice.
We have iguanas here in all those sorts and stuff.
I went to graduate school in Florida, man. I moved to Florida the first week of August. I'll never forget this. And I remember going across I lived in my parents' condo. They lived about in Coral Springs, which was about 30 miles
Yeah,
from
I
where
was
the
there last
university.
night.
So the condo was there, and I remember walking to the car, which is like 80 feet, and I was drenched, and I was like, "Oh God!" So I used to call them 8 shower days, you know. So I used to have to take 8 showers throughout the day.
That's exactly right.
The buddy
All
of
right,
mine I was
guys.
talking about
Well,
on the
this has
crypto
been
side.
great. This is a good conversation. Enjoyed it, Gary.
All right, we'll let you guys go. We'll do this again, Gary. We'll reach out.
All
and
right,
get
guys,
together.
great time.
Thanks
Take
very
care of
much.
yourselves. All right,
Great
we'll
stuff.
see you soon. Take it easy.
Bye.
All right.